We're going to move on now to China, and of course China dominates so many of our discussions about so many things at the moment. We've just celebrated the Chinese New Year, of course, and I'm sure many investors will be hoping that last year's difficulties will have come to an end. So let's have a look at what is going to be, I think, a pivotal year, everyone is saying, for China, with a man who has managed Pacific equities for Janus Henderson since 2004. Mike Kerley, I know you're standing by. Thanks for joining us, Mike.
Thank you, Lucy. So I'm going to spend, well, obviously a fairly short period of time talking about a big subject, but I'll try and keep it into the time allowed. So I'm going to spend, well, 12 minutes or so talking about three main things: why China had a difficult year in 2021, and what our expectations are for 2022. So maybe if we start with the first slide and just highlight how bad it was in 2021. So this is just looking at the markets of the US, China, Asia, and the world in general. And it was a pretty awful year. So bad, in fact, that the 49% differential in the performance of the MSCI China versus the S&P 500 is the biggest disparity in the history of those indices. But it actually started off quite well, as you can see in the first part of this, where China was getting some credit for how it initially dealt with the COVID outbreak. So China started outperforming. And actually, if you take it from that peak in the first quarter of 2021 and until the bottom, it was actually more like a 50% decline in the index over that period. So quite significant. And there's a couple of reasons for that. I'll go into the China specific ones in a minute, but the big macro picture was that basically China did better through COVID. As a result, didn't need the same kind of quantitative easing and central bank and government support that the rest of the world did. And as a result, didn't have the excess levels of liquidity, which drove asset prices, as you can see from the performance of world indices compared to China and Asia as well, for that matter. If we go on to the next slide, I'll talk about the stuff which is more China specific. So the first point I've got here is regulation and common prosperity, which have been well talked about, as we know. And the edges between the two are blurred. China chose 2021, a year with GDP growth, which was almost assured coming off a low base, to make some pretty astounding changes, long-term changes in line with what Xi has talked about and the structural development of the country in general. Regulation was probably more off the cuff and prompted by, I think, some of the comments by Jack Ma from Alibaba at the end of 2020, when I think it was called into question some of the power of these big internet platforms. And we saw regulations to kind of reduce that power, reduce the effect it had on other industries, some of the monopolistic practices, some of the abuse of labor, etc. And that carried on through most of 2021. Common prosperity, I think most of us would applaud. Anybody trying to reduce the wealth gap or the huge disparity between the wealthiest and the poorest people, I think should be applauded. The way China went about it, I think, was probably a little clumsy. And there was other reasons behind this as well. As we know, China has a demographic issue long term. The working age population will shrink considerably from 2025 onwards. And one of the main reasons why people aren't having as many babies, in fact, despite the removal of the one-child policy, birth rates continue to fall in China. And the main reason that people mention is the actual cost of bringing up children. That's mainly focused on education, healthcare, and property, which is why we saw quite a lot of measures in that area. Now, both of these two were very popular with the people. In fact, Edelman do a trust survey at the end of each year as to how much people trust their government. And the trust rating for China was actually 91% for 2021, which is up 2% from where it was. By comparison, the US is at 39. Now, obviously it's a survey, so there are flaws in that, but generally, the removal of some of the regulations which can lead to abuse in the internet sector and generally improving the situation with the common person are very popular policies within China, but massively disruptive for investors. some of the expectations that people had in terms of growth levels or profitability, certainly in some of these more sensitive industries, which I mentioned, has caused a lot of uncertainty, and that hasn't helped share price performance. The second point is property excesses. We saw that with Evergrande in particular. It's a sector which is very highly geared, and there was some measures brought in here. In fact, tightening measures were brought in to stop excess levels of gearing, but also to manipulation of pricing, etc. Again, this is one of the key sensitive industries for the Chinese, and they're worried about the long-term structural impact of a highly geared property sector. The third points relate to COVID. And China's had a zero tolerance policy to COVID. So as the rest of the world is now beginning to live with rather than fight against COVID, the Chinese are still very keen on locking down. So when you get 20 infections in a city, you lock down 13 million people. Certainly that's happened into the Beijing Olympics and probably will continue to a point afterwards. And the reason why they're doing this is partly because there's a lot of political capital. Xi has already mentioned quite a few times how well China has dealt with COVID compared to the rest of the world. And to go to a situation where we have lots of cases and hospitalizations wouldn't look good politically. But the next point is really the fact that the local vaccines don't have the same kind of efficacy, efficiency as the Western vaccines. So if you've only got efficacy of 60% compared to the 90% we're talking about here, if you open up and get the same kind of levels of infections that we see elsewhere, then clearly that could have a detrimental impact on the health system, numbers of deaths, etc. And finally, the options for reflation are somewhat limited. So in the past, when China's gone through a period of weakness, what you'd normally see is they push the button of infrastructure spending. Local governments would go out and borrow huge amounts of money, build bridges, cities, roads, etc. But that's more difficult this time around. Firstly, the levels of debt at the provincial levels are very high. But also, a lot of the revenue from these governments comes from property sales. Property sales at the moment aren't quite as easy as they once were. There's also, if you push the button on infrastructure, this is pretty energy intensive, and there's been energy shortages across China. And also, when they tend to push the infrastructure button, you get commodity prices moving higher as a result, and they're already pretty elevated. So the normal measures by which the Chinese would play around and stimulate the economy aren't open in the same way they have been in the past. So how weak is China on the next slide? Well, it's pretty weak. These are 4 economic snapshots, really. And you can see the trends are pretty obvious, whether it's industrial production, money supply, property pricing. They're pretty weak. I think the one that's most interesting here is retail sales. China is aiming for a services and consumer-based economy. And when you see retail sales growing at 1.7%, as they did in December, year on year, that's way below what you'd expect from an economy at this stage of development, and what the Chinese would like to have. So that's the most worrying factor. So my final slide, I'm just going to talk really about what the Chinese are likely to do in 2022. Next slide, please. So zero tolerance to COVID. I think it remains, certainly initially. I think it's unlikely that we're going to see borders opened in China this year. However, I will caveat that with 3 reasons why I might be wrong. The first is they developed their own mRNA vaccine, which is similar to Pfizer or AstraZeneca, and it's not the same as the Sinopharm vaccine. I believe that's in the final stages of development. So it is possible that they could get a rollout of a more efficient vaccine in the coming months. And the Chinese are very, very efficient at doing mass vaccinations, as we've seen already. So if that's developed, and if there's a mass vaccination policy, we may then well see China bring forward that opening up. They may well approve foreign vaccines, although clearly they would rather develop their own for political reasons and for face reasons. But I believe the Pfizer vaccine is is already there in terms of approval, just needs the button pushed. But I think they'd like to do that alongside the domestically developed vaccine as well. And the other reason may well be that COVID blows itself out around the rest of the world. It's possible. Certainly, if it does, and the rest of the world sees a lot lower cases, then it is possible that the Chinese will open borders based on that. Although I think they'd much rather have control of it rather than rely on other countries. The second point here is monetary policy. They've already cut interest rates twice, cut reserve requirements for the banks to increase liquidity. We think that's going to continue, but they won't go all out down the infrastructure route, but they will focus on specific areas, probably to promote consumption more than anything else, incentives maybe for people to trade in white goods for more energy efficient equivalents or electric vehicles, etc. On the property sector, we think there will be no mass loosening here, although there's clearly pressures there. Again, Xi has made it pretty clear that property is for living in, not for speculation. So there'll be a focus on liquidity to make sure that some of these developments, which have been tied up by companies which are in or bankrupt, that these continue to start, because the last thing that China wants here is a lack of property supply that could drive prices higher. And we've seen measures announced today actually about social housing, and that's clearly meets with those goals. Regulation, I think the news flow has peaked. They chose last year because it was a very strong year to bring in these measures, because they knew it would have a detrimental impact. I think there's less leeway this year. And also most of the key measures have been outlined. This is a year for implementation and for companies and the markets and everybody else to get used to them. So at the edges, there may be some more, but I think the worst is probably past. Common prosperity is a core theme. It's ongoing. It fits with China's goals for the next 30 years. So now more than ever, it's really important to invest alongside those goals and understand what the Chinese are trying to achieve with this move to common prosperity. And the final point here is that I think China's interesting because it will be the only major economy loosening in 2022. As I showed you that chart right at the beginning, and one of the reasons why China underperformed was because it was tightening as the rest of the world was loosening. And that has a detrimental impact on performance. Now, here we are in 2022, the rest of the world is likely to raise interest rates soon, cut quantitative easing and reduce liquidity. At the same time, China is probably going to be doing the reverse. And for that reason, I think it is a pivotal year, as we said. It could be a very important year for asset allocation as well. I will leave it there, Lucy. And if you have any questions or anybody else has any questions, I'm more than happy to answer them.
Mike, we do have a quick question here actually for you on clean tech, given how much of the technology and equipment, you know, we've been talking about decarbonisation already, but a lot of it is being produced in China. So this question is around your views on clean tech, where you see the best opportunities.
Clean tech. I mean, clearly, environmental concerns in China in general, rather than just the technology sector, are very much at the forefront. Although to be honest, I think China is going to push those expectations back a little bit this year. So I don't, because of the pressures on energy and power shortages, etc., I think that they were going to push back their expectations on environmental concerns somewhat, which is a little disappointing, I think. For technology in general, I think the important thing, alongside what I said earlier on common prosperity, is China wants to promote innovation. And I think the worry is that when people look at China, they say, well, aren't they clamping down on innovation? No, they're not. No, they want to be the leaders in a lot of areas. So clean technology, environmental issues, whether it's electric vehicles or this, that, and the other, will continue to be at the forefront of Chinese policy.
Great, Mike. Thanks so much.
Pleasure.